Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday. And we're sitting here now at the 24th of May, 2022. Got the rest of the week, have Monday off, then we take another look, right? All right. The dollar down a little bit today as we're still getting power to the upside in a number of currencies. And what's happened here is the switch is gone. What do I mean the switch? Somebody threw the switch, and her name is Christine. Yeah, Christine Lagarde. And what she did is when she said that they were ready to make their moves now in the European, in the euro currency, out of the European theater, it changed everything. And what it changed is all of a sudden the euro came alive. They're not talking parity anymore. They're talking the market taking off. The arguments are now a quarter point, half point hike. How frequent are they going to do them? And with that, the dollar, the pressure on the dollar going up comes down. The headwind to the gold removed. It's really that simple. Today, the silver started coming to life, and you're still sitting here in the 430 area in the copper market. Now, as you look at the gold market, you can see a weekly chart of closes. You're getting your bounce. Could you be coming back to the 1896 zone, which is the 18-week moving average of closes? That seems to be a target that is shaping up. When we take a look at the chart action here, you can see that you've got a market that's in an uptrend, higher lows, higher highs. The market is now come, and it might do what I call one of those kisses, where it's like a sled. You're riding, you don't get under that 200-week, and you start glide pathing back to the upside. Could be the support zone. You have two layers of support now, the 18 and the 200-week average of closes. The resistance is going to be the combination of the 100-day moving average, the upper Bollinger Band, and as you can see where the support's coming in, and momentum is still pointing up. So everything is still saying uptrend at hand. You break the pattern if you get yourself under 1830.60, but without that, the resistance 1888.20 coming into play. Now, tonight you're getting your first cross where the price is getting under the 18-day average of closes, which means to me silver is getting stronger than the gold. Now, if we take a look at the action, the highs that we had today in silver were 221.50. You haven't done anything like that yet. The market is up on the day about 6 cents. The trend is up. The battleground's right here, the 18-day average. If it can lift itself, then you start looking at the 22, what is that going to be? Around the 2286 level, I'd say, right in that zone. That's what I think you have to look at as the next potential resistance area. You break the uptrend if you get back under 2164.5. So I think today was the day the market decided to say, let's give it a try. In the copper market, it looks a lot like silver, actually. You've come up, you're fighting a battle, you're trying to stay over the 18-day average. The momentum is still up. Now, what you have to pay attention to here is, of course, this is about China. And we don't want to see that Shanghai goes back into a negative or cases pop and that the Chinese government decides to not go with the plan that they've set out to open Shanghai, and it could be other areas. Beijing, we're not hearing too much about. In fact, the Chinese are very quiet. You don't hear too much about anything from them. But behind the scenes, look at how the market has come up since the word has come out that they are opening up. Now, their economy is getting killed. You know that. They know that. So it would be in everyone's best interest if we can find a way to make this better. The reality of the situation is COVID's back. And if I was reading today just before I began watching this, at least in the Chicago newspapers, where doctors are now saying, not the CDC, doctors are recommending, if you're indoors in a public place, put back on the mask. So the cases are piling up again. Resistance, 437.80. In the platinum, more or less a market that has just gotten married to the 18-day average, can't seem to break out one way or the other, not in a trend, lower low, higher high, a churn. So in summary, the metal markets, even when you look at this, they're not moving much to the upside, the downside, the plays aren't there just yet. It's gotten quiet in them. And when you look at the dollar, you're still breaking down in the dollar, oversold. You're at the final point now where you're just getting under the Bollinger Band. You only spend 5% of the time under that. So you're getting to a point where I would look for a market to get reasons to get a bounce one way or the other in it. And that's going to be, I think, the next thing we have to look at. Now, I'll be writing about this. I do. Twice a day, in case you don't know it, I write a report. I pride myself in that my report should be written in a way very much with the idea that you can read through them quickly, get all the key points. I do a lot of bullets, almost like an outline, then give you the points in short paragraphs so you can keep up with what it is. I can do all the facts I want on the charts in my videos. So they tie hand in hand and they back things up. My full research includes the morning subscriber video, my twice daily updates, access to my weekend videos where I do the weekly charts. You get the bigger picture on everything. And of course, every one of them, buy here, sell there, here's your stop order, here's your target with the market. And sometimes I like to, on the same chart, show the daily and then the weekly to give you an idea what the full picture is looking like. If this sounds like something that might be of interest to you, well, it's simple. All you've got to do is go to our website. You can go under the word research. Everything is explained there in great detail. You can click right here if you'd like. That'll take you right to that section of the website, and away you go. I'm Ira Epstein. You have a great day. I will talk to you all later.